I would say one of the biggest hurdle is, again, credit rating. So you have a number of sovereign ratings around the region where you would have a deal flow for infrastructure and green infrastructure, say Vietnam, but Vietnam is not investment grade. So most of the life insurance companies are actually prevented from investing more than a very small minority of their assets in those markets. Then many of the global investors are also US dollar or euro investors. Most of the markets in Asia, and it's probably a good thing from a risk point of view, these are local currency markets. Thailand, Philippines, Malaysia are good markets with a huge demand for infrastructure. They actually have a fairly easy to understand regulatory framework. Most of the markets I listed are actually investment grade, but they're in local currency, and hedging market is limited. Some of it is due to some local regulations to manage the currency. So that's one thing actually that could be considered in discussion with the regulator on what might be improved to help develop a longer tenor hedging market. And there's another regulatory point, and I'm sure we can discuss that with Sekai, is around insurance regulation. So you have insurers with appetite for long tenor financing, fixed rate, which all of that should be ideal for financing infrastructure. But then the local insurance regulation would typically put a penalty on the sort of illiquid investment, which is all about infrastructure financing, will be largely illiquid apart from some public bonds, which would be, they're not actually generally very liquid, even though they are public instruments. So you have a lot of local regulations, again, from a risk management point of view, which tend to put a fairly high capital charge on this sort of infrastructure financing. So that's probably the biggest hurdle actually we face. And unlike a market like Europe, where you had Solvency II, a continent-wide framework with very clear rule on when you can get the suitable capital treatment. In the region, it's a case by case. We're working on one transaction in one of the Southeast Asian markets where we're having to make an ad hoc submission to the local insurance regulator to be able to get the right capital treatment for our investor. It should actually work the other way. It should be clear, like a sort of checklist, and then you are able to apply directly the suitable capital treatment for that investment. And it's just subject to audit and other matters, but you shouldn't have to make specific applications to the regulators on fairly complex, contractual arrangements around a project, etc. For specific transactions, and some of it are actually too small to actually justify all of that paperwork.